Tech shares lead the rally as Wall Street breaks the three-day losing streak. Stocks in the Asia-Pacific trade higher after encouraging inflation data from Japan. The Gift Nifty is indicating a flat start for the Indian market. Crude prices rise. Brent trades above $79 a barrel as geopolitical tensions escalate in West Asia. Strong demand forecasts and larger than expected drawdowns in U.S. inventories also aid the move higher.
Any premature pivot in our policy, it can be very, very costly for the economy.
The RBI Governor rules out any rate cuts in the near term, also says the Indian banking system remains robust, but cautions at the same time against exuberance in lending. And Nifty 50's biggest constituent, Reliance Industries, will report its third quarter numbers today. Weakness in the oils to chemical business is likely to be offset by stability in Reliance Retail and Jio. In other earnings to track today, FMCG major HUL is expected to report a steady set of third quarter numbers later in the day. Also watch for numbers from Ultratech Cement and Paytm. Good morning and welcome to Power Breakfast. I'm Pavitra Parikh. Those are the top headlines that we're looking at this Friday morning. The global handover, at least for this morning, is looking a lot better than it has in the past 2 days. So the US markets ended in the green. Most of Asia is in the green as well. What's leading the gains this morning? You have the Japanese index. So the Nikkei market is up quite sharply. It's over 400 points in the red right now. Seng, Taiwan, like you can see, all doing very well. The Taiwanese index is up 1.7% right now. So big move seen over there. Hong Kong also around 0.2% in the green right now. Actually, for all Asian markets, Kospi, Shanghai, all of them managing to trade in the green right now. I do want to point out that for the week, of course, the Asian markets have suffered a big hit. So the Hong Kong markets for the week is down more than 4.5%. You have Kospi, Taiwan, both down over 2%. For the week as well. But for now, the cues are positive as far as Asia goes. The Gift Nifty will come up for you and it is indicating an absolutely flat start. It's moved up a little bit right now. So it's around 17 points in the green for the Gift Nifty. So that's what's happening in Asia. But let's also talk about the US markets because like I was pointing out, we did end higher on Wall Street as well. The Dow surged over 200 points while the S&P 500 closed around 0.9% higher. The Nasdaq index also rose 1.35%. So it was a largely tech-led rally that we saw on Wall Street. We had Apple shares which advanced nearly 3.5%. After Bank of America upgraded the stock to a buy rating. Meanwhile, we also saw Treasury yields continuing to surge in the US. This has been going on this entire week. And right now we're at 4.16 on the US 10-year Treasury. This is after a stronger than expected weekly jobs report. And, speaking of the US, there's also some important commentary that we got from the Atlanta Fed President Raphael Bostic, who said that he expects the Fed to start reducing rates in the third quarter. This is him, of course, changing his earlier stance. So that is important to track as far as the US market goes. But let's also bring you some important opinion. This is from former Fed Vice Chairman Alan Blinder and what he has to say on Raphael Bostic's comments. Listen in.
Bostic, I usually think of Bostic as on the dovish side, and here he is downplaying the notion that rates are coming soon. I mean, the market's getting ahead of itself, and the Fed is aware of that and not thrilled about it. On the other hand, you have Christopher Waller, who I think of as on the very hawkish side, talking openly about rate cuts. So, we're in one of those periods where you don't expect the whole committee to be on the same page, and they're not.
Okay, that is the word coming in, and that's what we're looking at globally. But let's now talk about all of the cues that are important from an India market standpoint, as well as the stocks. We have Ekta, Mangalam, and Hormaz all here to fill you in with the trade setup. Guys, a very good morning to all of you. Ekta, let me come to you first. Of course, it'll be important to see if the pullback is done for now or not. But take us through what we should watch.
Thanks for that. Well, yes, yesterday the markets did extend their losses. It fell for the third straight session. FII's net sold another whopping figure in yesterday's trading session, and the DII's net bought quite strongly, close to around 6,000 odd crores. Now, yesterday the sluggish global markets plus mixed earnings really weighed in terms of sentiment because we had numbers from HDFC Bank, India Mart, LTI Mindtree, ICICI Pru, which probably weighed down in terms of overall sentiment. Now, this morning things are looking better. Besides that, earnings, we have IndusInd Bank, which will be reacting to its Q3 numbers, and its net interest margins have come in flat for 3 quarters. Slippages were higher, but there wasn't real significant net interest margin pressure which came through for IndusInd, and I assume that would probably assuage a little bit of concerns for the market. Separately, we have the US markets, which rose, led by a tech-led rally. Asia, which is largely higher at this point in time. Brent crude, there are no surprises. It's hovering at around $78, $79 per barrel. And the Gift Nifty is suggesting that yes, we could start in the green. Whether or not we sustain it, what the FII picture looks like will be something that the street will watch out for. Earnings today, we have Reliance Industries, HUL, Ultratech Cement, as well as the likes of Paytm. Tomorrow is a trading session, so we do have ICICI Bank, Kotak, IDFC, First Bank. We will have Reliance reacting to its numbers, but besides that, we have a lot of focus in terms of financials, pre-numbers, post-IndusInd Bank, as well as in terms of a reaction, in terms of Monday's trade.
Okay, got that. Ekta, thanks a lot for taking us through all of those cues. Clearly a lot of numbers that we should watch today as well as tomorrow. But Ormaz, also a lot of numbers that came through post-market close yesterday.
Indeed, and as Ekta was highlighting, IndusInd Bank will react to its results. Most of the numbers were in line. The NIMs were a positive surprise. Slippages were a bit high on a sequential basis. So that was something that we'll have to watch out for. But also reacting to their results from the broader market space, something like Reliance Industries, Shoppers Stop, Metro Brands, Supreme Petrochem will also be reacting to numbers. And speaking of Supreme Petrochem, they've purchased some 96 acres of land in Haryana to set up a new unit, and they'll be spending around 800 crore rupees to set up that unit, and they'll be funding that through internal accruals. Dixon Technologies informed the exchanges yesterday that one of their units in Noida got searched by the Directorate General of Revenue Intelligence. This was regarding a raw material imported for one of the products that they manufacture, but the issues that they have raised are interpretational in nature, is what Dixon has said, and that they have cooperated with the authorities and there is going to be no material impact on the same. EMS has emerged the L1 bidder for an Uttarakhand project in Uttarakhand, which is worth around 480 crore rupees. That's for a water supply and sewerage treatment project. Bajaj Finance's board will meet on the 29th to consider a fundraising proposal. This is through debt instruments. And lastly, HCC, where its subsidiary in Switzerland has divested its entire equity interest in another unit to a French company for around 928 crore rupees. So we'll keep an eye out on all of that, but it's Reliance it's going to be the one to watch out for. Back to you.
Okay, Harmaz, thanks a lot. We are going to watch for all of these stocks in today's trading session. Finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Mangalam, yesterday was another weak session, but off the lows.
Another day, another decline of the week lows, what we saw. But we know two things that stand out. One is the FII selling in cash market. For the second day running, we saw nearly 10,000 crores being pulled out. So 2 days, 20,000 crores pulled out in the cash market. And why was that? It was because of HDFC Bank. Just take a look at the way the Nifty moved yesterday along with the HDFC Bank stock. You would see that the Nifty did recover from the lows, but HDFC Bank towards the end of trade actually saw accelerated selling. And that amounted to delivery selling of nearly $1 billion as well. So yesterday's trading session, we saw another day 8,360 crores of delivery selling in HDFC Bank. Not only are the FII selling in cash, they're also selling in index futures. 2,500 crore worth sale is what we saw yesterday, where the FIIs added 18,000 shorts and unwound 7,400 long contracts. And this is stark. Why do I say that? Because, from the start of the series, the FIIs were 70% long. Now they've moved to net short position. So FIIs were 70% long at the start of the series with 81,000 long contracts. Now that's turned to 49% long exposure with just negative 5,000 long contracts on net short contracts itself. In the last 2 trading sessions itself, 85,000 net short contracts have been built. For the near term, however, we're looking at Nifty's yesterday's range as markers to watch out for in trade. Now that the Gift Nifty is indicating a mild positive start, important to trade above yesterday's high. For the Nifty Bank, the 100-day moving average will be a crucial support. And on the way up, for any change in trend for the market, we'll have to watch out for whether the Nifty does go ahead and cross the 20-day moving average of 21,644.
All right, let's see if that happens. Mangalam, thanks a lot for taking us through all of those cues. With that, it is time for a break on this show. But when we return, we're going to bring you excerpts from our exclusive conversation with RBI Governor Shaktikanta Das on the sidelines of the World Economic Forum in Davos. Stay tuned. Hey guys, welcome back. You're still tuned into Power Breakfast. Let's get you an important word now. RBI Governor Shaktikanta Das rules out any rate cuts in the near term. Speaking to Shireen at the World Economic Forum in Davos, he adds the growth momentum is secure and that the 7% estimate for the fiscal year was a conservative one. The governor also said that India has a robust banking system. So let's listen in to some of those comments.
Whether it is the industry or the private sector, or it is the analysts or the economists or the serious the market players, in the context of India, I don't think anybody is expecting a rate cut now. In most of the advanced economies, the markets and the stakeholders and the market players, their assumptions, it is ahead, they're overrunning their central banks. So far as India is concerned, I think the thinking of the central bank and the thinking of the market participants, they are much better aligned. In inflation, with regard to inflation, I have said elsewhere that our policy has to remain actively disinflationary till we reach the target of 4% on a durable or a sustainable basis. You are right, absolutely right in saying that any premature pivot in our policy, it can be very, very costly for the economy. If you see the last 1 or 2 years, the deposit growth has been around 12 to 13%. Yes. The credit growth has been about 15%. Now, obviously, you see, it's not that you get X amount of deposit and you extend that X amount as a loan. It's not like that. Share prices in the stock market do not necessarily reflect the fundamentals of a company. I'm talking in general terms, not with reference to a particular bank. Generally, if you see, the stock prices are determined by so many other factors and do not necessarily reflect the fundamentals of a company. You have examples in every sector, whether it is the financial services or banking or any other sector you look at. There are companies with very strong fundamentals, but its share prices should be low. And the converse also happens. So therefore, it will not be correct to, judge the health of a particular sector like banking in particular in terms of share prices, movement of share prices, and that too on a single day.
There is a concern or perhaps confusion as far as the credit deposit ratio is concerned and whether the RBI is likely to mandate a number or not. Could you clarify this for us?
You see, we have not mandated any number. I think there was, let's leave that. But what I would like to say very clearly is that we have not mandated any number, that this shall be the credit deposit ratio. We have not. And at the moment, we don't propose to. Because credit deposit ratio is just one of the parameters to assess the health of a bank. There are several other parameters. So you have to look at it all in totality. All that I can say is that there should not be exuberance in lending, number one. Number two, there should be some correlation between your deposit base and your credit growth. There should be some correlation. But in terms of hard coding it, in terms of a particular number, there is no such proposal in our mind, and we have not prescribed any such number.
All right, very interesting conversation with the RBI governor, and we will bring you more from that through the day. Before now, there's some more coming through from Davos. Shireen also caught up with Ashwini Vaishnav, the Railways and IT Minister at Davos, who spoke about the railway expansion plan. So let's listen into that.
Let's also talk about railways, and you said that you had meetings with the Swiss authorities here, but I also wanted to understand from you, in terms of the ambition and aspiration now as far as railway capex is concerned, as far as building on the project momentum is concerned, what's the view, what's the road ahead?
See, the progress in railway expansion and modernization is huge. For example, last year we added 5,200 kilometers of new tracks. That's like adding the whole network of Switzerland in 1 year. 5,200 kilometers. This year we are doing at a pace of 15 kilometers a year. So 15 kilometers a day. 15 kilometers a day is like huge. We have just, out of the $29 billion capex that we have planned for this year, 2,40,000 crore, we have already accomplished 77% as on yesterday. I get a report on a daily basis. I monitor it so closely. So we have already achieved 77% of it.
All right, that is the word coming in from Ashwini Vaishnav. With that, we will get into a short break now. But on the other side, index heavyweight Reliance Industries will report its third quarter numbers later in the day. We'll tell you what the street is penciling in this time around. Welcome back. Let's talk about that key cue to track today, which is that Reliance Industries will be reporting third quarter numbers later in the day. Now, we are expecting weakness in the oils to chemicals segment, but that is likely to be offset by some stability, which we will see in both the retail as well as geo vertical. So Sonia is here to line up all of the key expectations. Sonia.
Thanks a lot for that. It is expected to be a mixed quarter for Reliance Industries this time around. First, let's take you through the stock performance. The stock has done quite well, actually. In the last 1 month, it's up about 10% and the stock is 4% away from its 52-week high of 28.56. However, this quarter, the numbers are expected to be largely flattish on most parameters. Let's go through it. Revenues are expected to slightly improve to 2.5 lakh crores. The pressure is expected to come through on the operational side this time. So we're expecting an EBITDA to be largely flat on an absolute basis. But the margins, EBITDA margins, are expected to come off to around 16.4% versus 17.7% last quarter. On the profitability front, a slight improvement at 17,800 crores is what we're looking at. But the entire oil and gas industry has been under pressure this quarter, and Reliance is not too far behind. It will be a weak quarter for oil and gas companies, particularly in the oil to chemicals business has been on the weaker side. However, that will be offset by stability that we're expecting in Reliance Retail as well as Reliance Jio. So let's get down to a couple of expectations over there. On the consolidated front, the EBITDA will be largely flat, as I said. But if you look at the consumer-facing businesses for Reliance Jio, the EBITDA could rise by 4% quarter on quarter. And for retail as well, we expect an improvement. In Jio particularly, expect 12 million net subscriber additions to come through this time. And, the other important internal to track is the average revenue per user. Slight uptick over there to 183 rupees versus 182 last quarter. In the retail side, there has been an improvement in consumer demand because of the festive season, and hence we're expecting the EBITDA to rise 5% quarter on quarter. Not just that, there's operating leverage that kicks in this time around as well. Now, a couple of key monitorables overall for the business. One is there any kind of indication on what the spend is in the energy business? Remember, there's a 750 billion rupee announcement that Reliance Industries has made in the new energy business. Further clarity on that will be keenly awaited. Apart from that, any growth in retail store additions as well as any pricing action in the telecom space are key monitorables. But standard disclaimer, Reliance Industries is the owner of the channel that you're watching.
All right, Sonia, thanks a lot for taking us through all of those estimates. That is the big cue to track today. But with that, we are going to wind down on this edition of Power Breakfast with the news that the Asian markets are all doing well. The implied open for our own markets has also moved up quite well in the time that we've been talking. We're now 40 points in the green for the Nifty Open. So thanks a lot for tuning into Power Breakfast. We have Bazaar Morning Call on the other side.